Welcome to Many Millions, where we focus on the many reps and the million moments it takes to build a trading career.
Welcome to part 4. So far, we've learned the theory, the setup, and the risk management. Now it's time to see this strategy and how it actually performs in a live market. So in this video, I'm going to break down 2 real trades, one winner and crucially one loser. I think it's more important actually that you know how to handle a losing trade than a winning trade. Winning trades, most of the time, people can manage somewhat okay. It may be a question of greed, some emotions that come into play, but at least you know that at that point, right? You know that you're in a good strategy, you know you have an edge, you just need to control your emotions a little bit more. Losing trades are much harder to control your emotions. So let's start with the losing trade, and then we'll get on to an A-plus winning trade. Now, both of these trades, by the way, are going to meet my A-plus requirements. That means that just because it's an A-plus setup does not mean it's going to be a winning trade. You have to realize that. That's just part of trading. Even when you have your edge and your highest probability setups, you cannot win them all. You have to learn how to be a good loser. Tom Hogarth, right? It's best loser wins. So let's get into it here. I'll start this off this is obviously just a market replay from September 17th. You can see we've come off of this resistance level. We've traded down, bounced off of this support level. Now we set a higher high, another higher high. Obviously, this is a resistance level. It's looking to obey, and I would be looking for a short entry here. So I have my units set up here, and I don't love this about paper trading in TradingView, but that cross below my main EMA, that is my signal that I can enter. Normally, I would have this already set up for my stop loss and take profit. Let's bring my take profit down into about this range. I don't think I'll call it to the lowest low, but close, right? So we're aiming for about a $2,000 profit here versus a slightly less than $400 risk. I'll take that all day. So we have our A-plus setup. We have our A-plus indicator saying this is a good setup. Let's see how this trade goes here. As it starts to fall down below the 9 EMA, seems like it's going to respect the 9 EMA even. We're going to speed this up just a little bit for the sake of the video. You don't need to see it play out forever. But you can see that it's just chopping around, and my volume levels here are just doing the same. So by now, I would be bringing this into break-even territory at least. And boom, I'm out. So you could say, hey, that was a break-even. That's not really a losing trade. Okay, well, if I hadn't moved it down to break-even, I'm now in some drawdown once I get up to this bearish divergence. So it's not a good trade. It didn't go my way, and now we're just consolidating. You wouldn't want to stay in that trade anyway. So how did I handle that? Well, for one, you can see that I still moved my stop loss down to break even. I at least got that in my favor. So that's one of the biggest things I think you can do to be smart with losing trades. Try to cut your losses as quick as you can. If you feel like it's going against you, if it's even ticking up and down across this 9 EMA, that's not your setup. Your setup should work almost immediately. And if it's not going to, get out of that trade and cut your losses sooner rather than later. I'm not even a trader that likes to just leave my stop loss up there and let it get hit. I like to be a little bit more discretionary that way, especially with my stop loss. I'm very, very aggressive at cutting my losers early and rarely letting them run. Typically in the market, I'm letting a 15-tick stop loss, which is about $187 on 10 units in the minis. I never, almost never let it hit $187. I might let it get to 150, but if it hasn't run my direction with this strategy, if it doesn't do that almost immediately, I'm on the wrong side of the market and I know it. I need to push my emotions out of the way and just cut my losses. So that is the emphasis that I would have for you on a losing trade. Try to realize that this is not your normal setup. Your normal setup, the high probability trades, work in your favor immediately and have 2, 3, 4, even as many as 10 bearish bars in a row. Not this choppy action. This is not what an A plus trade continues to look like. Now, it may have met all of the criteria right here, but as you saw here, we're now 1, 2, 3, 4, a pullback, 1, 2, 3, now back up. That's not the high probability trade you're looking for. So you could even cut it right here at your break even point, right? And just say, this is now ticking back up against the 9 EMA after a 1, 2, 3, 4 pullback above the 9 EMA. It's not my setup. I don't want it. Cut it. Simple as that. All right, now let's walk through an A plus winning trade and what that looks like. Now we're going to start with the basics as we always do. We look left. What's the significance of this level? Well, you see it's been a pivot point multiple times here. We had rejection here and ended up pushing through. Bounced off of here multiple times. It's supported. Pushed up through there. We've had a lot of chop here. Bounce, bounce, rejection, bounce off. Significant level, right? We already have a couple of A plus signals coming in now. Let me tell you why I don't really consider them to be full A plus. If I'm looking for a true A plus setup, I am looking for a double bounce off of this bottom. I know this is a support level. It is now pushed up beyond the 9 EMA, but just barely. Then it comes back down into oversold territory across the 4 stochastics. And now we're looking for another entry. I now have my bullish divergence as well. Be nice if I even got another one. Those are the highest probability setups. A double bottom with a double bullish divergence. So we're going to get in here. We've obviously got a good setup as per the last 3 videos that you've learned how to do this setup, right? So we're at this point just looking for that crossover of the 9 EMA. We have it. We're going to go ahead and make our entry here. I'll do my take profit. Let's go up around the VWAP here, around that resistance zone that it's called out in my indicator. And down here, I'll just have it right at the bottom of the range, just barely 1 tick below this new low. It's not quite as low as the previous low. I like that. That's great. So we're going to see how this one plays out. Remember, when it's a loser, it tends to pull against you pretty quick. Winners tend to just immediately take off. And you see how this works so well. So now I'm already up $337. I'm going to move this stop loss up here. And let's keep letting it play out. Now we're still actively managing just as we would a losing trade. We're protecting our capital every step of the way, whether this is an A-plus loser or an A-plus winner. And you can see how it's continuing to respect the 9 EMA. Just continuing up here. Yes, we had a 1, 2, 3 pullback. Not really a true pullback. If you look at the volume, it never really slid the other direction. You remember my indicator also has, in fact, there it is, also has this 3x ATR. So it's based on the average true range. That's really where I would say I'm going to close my trade. That's right at the top of the VWAP. I may be a little bit extreme up here at the 67.81 level. So I close my trade there, and we call it a day. And let's see what happens just for kicks and giggles. I don't actually know if the indicator called this ATR correctly or if it's going to keep going up into that range. Nope, it's now broken the 9 EMA. I'd want out anyway, right? So again, you're reading the market every step of the way. It's this context that you have here of the confluence that's going on And when it starts to run out of steam, you can see that we are now in overbought conditions on the 9, 14, 40. We're near overbought even on the 60 stochastics. No reason to stay in that trade beyond those signals. If these are all lining up into overbought territory and you're on the long side, you don't want to stay in. So you've seen the strategy, you've seen how it works while trading on a couple of live examples now. Stop losses, again, are just slightly below where that top or bottom were that you're bouncing off of. Ideally, you're looking for those double bottoms or double tops. They just increase that higher probability. And then from there, it's really all about protecting capital, both on a winning trade and on a losing trade. Nothing more frustrating than a winning trade that you saw run up to $900 and you keep hoping and thinking with some greed involved that you can turn it into 2,000, 3,000. Just keep going, right? Never a good idea. Let that greed take a back seat. $900 in a day is a fantastic day by any measure. Leave it alone. Don't let greed get in your way. If you haven't seen the first 3 parts, the link to the entire free course is in the description below. Go and watch those now to get the full context. If this series helped you, like this video, subscribe to my channel, Meny Millions, where we continue to do live market analysis, upload trades as we've taken them, call the market the way we see it. Let me know in the comments which part of this series was most helpful. And thanks as always for watching.